Hello again, it's Darren from Investor Income. Welcome back to the channel. We're going to look at, is stock trading legitimate today? Got an email off a guy basically questioning effectively what I was doing and what the videos he's seen on YouTube about stock trading. I do trade stocks and currencies. I trade in exactly the same system. People have doubted that, and I'll hopefully have my series of videos explain how I do trade. I'm not selling anyone anything. I'm putting my stock picks on YouTube as I go. If you can give me some feedback how I'm doing, that would be great. So, is stock trading legitimate? Well, of course it's legitimate. You can buy stocks in multiple platforms, most countries around the world, and people make money in it. Is it easy to begin with? No, it's not easy. But nowadays with YouTube and places like that, there is information out there which is accurate, and most of it, however, on YouTube is affiliate marketing trying to sell you something. So we'll just have a look at this very simply to start with. What we have here, as you can see, AT&T. It's a dividend aristocrat, so it pays out dividends constantly and has done for over 25 years. That's a good start. Now what we can see here is, if you're new to stock trading or if you're new to charts in general, it looks like a load of confusion. If we zoom in, these are the daily charts. It's 1 day chart. Each bar represents 1 day. And here we have, this is called a DEMA. It's a double exponential moving average. Now, some people will trade around these moves over the moving average. But for now, we're not going to go into that. I'm just going to try and explain how the basics work. If you look, it all depends on how you're going to trade the markets. But stock trading is absolutely legitimate because you can trade this stock pretty much anywhere, and you're going to make money through the dividends. So that's one element of legitimacy. However, also, if you look at any of these pullback moves, which is these moves here, you could buy at these levels and you'll at some stage make some money. Okay, that's because of the nature of the market. There are down sections in the market, and you'll lose money. Like here, for example, this has come right the way down. AT&T. So if you bought up here, for example, if you bought up here, okay, you might make short profit, and then over time you lose, and here you're down to, this is it, going back to 2003, you're down to what, $20 from a high of 60. Not a good time. Not a good time at all. However, you need to make things simpler. This company is a huge company. Okay, there's some things we can do as traders, and you'll see the indicators I've used in my other videos, that can make it simpler. And the first thing I'd recommend to you is on this kind of thing is you need to adjust your settings for these. Okay, so we've got here 34. We'll put in 3000. You'll see this might not calculate very quickly. So here's the line coming in now. Now, this is given us the average from a double exponential moving average over 3,000 of these bars. Okay, so it's a huge timeline. And because it's an exponential moving average, it does still move the way it calculates. Here, it gives us easier ways to trade. And down the bottom, we have the RSI. So I'm what's called a technical trader. I'll trade the technicalities around the chart movement. And I combine that with the analysis of the stocks themselves. So I try and trade certain stocks. I love dividend stocks because I always have that fallback position knowing I'm in a big company that pays a regular dividend. So that's my fallback position, and it creates a lot of satisfaction, and also it takes all the stress off. I just don't. There's no need to stress at this stuff. The only way you would stress the way I trade, the only reason I would stress is if there would be some cataclysmic change in the world that would take away any of the benefits. Like there's always talk about the crashes and how it's going to wipe everyone out, and it's always going to be the end of the world. It's always the end of the cycle, and these things will crash. There's no doubt this will come down, may hit the 20s again, may even go lower. But short of this company completely folding, and we know that there's demand out there, there's more and more people in the world, so as long as companies can stay profitable and keep up with the market, Their share price may go down, but they're still a profitable company, and that's what we need to care about. Good solid companies in good industries. So this line here, I'll go back to this double X. This is not one of the lines, it's just happened to be on the chart when I load in it. And the RSI down the bottom here is a classic 14 period RSI. So it shows overbought sections when it goes down to the 20, and overbought when it's around the 80 level, the levels I consider. However, I don't use the RSI, but it's just an example. So here you can see where my cursor is here. So we go down, we can see it's flat. We've pulled down below, it's oversold. There's a high chance it's going to bounce there. Okay, and this has gone well above. You can see the RSI comes down, and this range here, we've got a double bottom there on the RSI divergence, and it goes back up. Okay, so there's certain ways you can trade around this. This is not the way how I trade. I find that, again, too stressful. I do use indicators, two of ones I use, but it just shows you with a longer time period, this line, it takes the stress out, because you can see that you can all see the difference, the gap here down to this moving average. This is the average line over those 3,000 bars. This has had an exponential rise. Could it go up from here? Yes, it could. Okay, but the mean will always be, it will always come back at some stage to this line. Okay, so the further it deviates away from this line, the more chance it's got it will have to come back at some stage. We're talking days here. Okay, so you look down here, this is July, and it didn't touch down to the line or go near the line till October. So you could have gone in at this level, June even, or even sold here in March if you were selling. That's not what I do, but that's the way you could short these markets. It can, however, go on for a long time. You do get this stocks actually. If you look here, this looks like an example. If it loads, it probably won't load. You can see the lines, where the line is basically. If you were selling this stock, you're going to be in for a hard run. Okay, up to 2008 tops, and then this one comes down nicely. A nice indicator, this stock actually, of what was happening in 2008, and it comes right the way down. I don't know why that line's not loading, but there we go. So the longer time frames, here again you see the divergence. When I say divergence, I mean the difference between getting that line and here the RSI. So here we go down, it doesn't break this bottom down here, and the RSI, you can see there's a line up there, it's higher. Okay, so I'll be buying there. Okay, and the line's not a very steep angle either. So yes, it's sold off, but it's consolidated and it will go back. But look at the amount of time you'd have to wait there. To get a 50% increase in that stock, even if you bought the best time, you're looking at from May 2011, February 2009 to May 2011. But that's a 50% gain in your position, and then if you held it, you've doubled your position more or less at the top. Okay, and then we go on and it goes even higher. So if we're in at the 20 level, and then today we're still at 36. Okay, so we've got a load of profit held in, and we've been taking dividends the whole time. I'm not going to talk about the exact details of AT&T today, I'll do that in another video. However, I did buy AT&T, and I bought it beautifully, I might say so myself. It was down here somewhere, around this region, and I made a nice bit on this. I actually traded it back to one of my other moving averages, and it's been a fantastic trade, and I'm still in that stock at that position, just 50% of my position. So I made a nice profit on that one. It's all about taking the stress off, and the longer the time frame, and the fact that it's a dividend stock, that will help. So is stock trading legitimate? Absolutely, it's legitimate. I do hope I don't bore you with technicalities. Do tell me if I'm being too technical in these. It's just what I've kind of specialised in for years. So, yes, it is legitimate. This is how I analyse stocks, and I do go into the fundamentals as well, and I'll go through that in other videos. It's exciting times. I love this stuff. There is going to be a crash at some stage, or recession. I hate the word crashes. There'll be a sell-off. Everyone panic, and it will just create fantastic opportunities. The world will need stocks. Okay, that's not going to change. The currencies may do in the future at some stage if we carry on printing money out of thin air. But legitimacy of stock trading, yes, absolutely. It doesn't matter what the currency. We can just buy these great companies that pay out dividends in whatever currency, and hold them over for the long term. And if they're good companies, you'll make money. You just have to be patient and deploy your money when you see the opportunities arise. I hope this hasn't been too boring. I do love this stuff. I'm very passionate about it, and I hate all the scammers out there on YouTube. Don't pay for anything. You don't need to. If you would like some advice, email me. I'll leave my email in the bottom. I do hope you find this interesting, and stock trading is absolutely legitimate. You just got to be very careful where you invest your money and who you listen to. Thank you very much. Do take care of yourselves. It's been a fantastic day here, and I hope you all have a lovely, lovely day.